So I ended up closing kind of right in the middle of the, no, I guess a little towards the upside of the market makers expected move, but not much. Up 40 bips on the day, after moving up 150 in the overnight session. Um, Last night, the U.S. International Trade Court ruled against Trump, placing an injunction on tariffs. Today, the appeals court pulled that back, but GDP still sucked, so the market sold back off. It wasn't a very interesting day overall. Well, if you didn't catch the sell off earlier, it was kind of boring afterwards. We did get a little bit of support at the 5,900 level on ES after slipping it slightly earlier, but have failed to break back above 59.2750. So still a little bit of stagnation. Yields came down across the top end of the curve, and a little more in the belly. Dollar down about 52 points. Commodities dropping, but precious metals up. Oil down quite a bit. There was a decent sized breakdown in correlation going into market open. Some of that recovered, but correlation definitely ending the day substantially higher than yesterday's close. Some of that, due to Trump's discussion of maintaining trade restrictions on chips to China, hitting the semiconductor industry. And then also NVIDIA's earnings are now past. So we would expect to see some of the dispersion there unwind. Leverage on the carry trade did climb in the overnight, but fell sharply today. With the 10-2 curve moving up, but forward yield on volatility still negative at 4.5%. 3-month correlations rising. Bond volatility definitely hasn't caught up to that yet, although today's might move it a little. And interestingly, yesterday, a little bit of out of the money put demand into close. Correlation between VIX, cash VIX, still falling slightly, so there's still some short vol coming in. Breadth still slipping. Fed fund futures moved up a little bit today, pricing in 0.12 cuts, but nothing substantial. And we got a tiny uptick in the bear steepener. Ultimately, we retested the trend again at market open, failed, got a bounce on 58.78-ish. Right there, and then kind of close the day back in the range that we've been fairly stuck in since like OPEX. So still no meaningful breakouts yet. Still need a higher high in order to get a full reversal here, and so we're sort of still a little bit short of that. I actually think we're still short of the March high. Yeah, we are. March high up at like 59.86, which is probably a kind of important level. But this is our first bounce off of the 200 MA, which we tested on last Friday. If this fails to get a higher high, which so far it has, that could be slightly bearish, or at least for another retest of the 200 MA. So we'll be keeping our eyes open for that, probably after the end of the quarter, or end of the month. Obviously tomorrow we're gonna get a little bit of window dressing, likely, and then we have like the baby JPM collar roll, so that might provide some intraday volatility. But pinned here at like the 5,900 level, I'm not sure it's going to do much more than that. The macro environment's very uncertain right now, and with things being in the court, it may just be that we get a lot of kind of flat day over day trading as realized vol continues to fall. This looks like 2023. We keep double topping. We're not, well, these aren't tops. we're still like a couple $100 below all-time highs. Anyway, that's about it. So Costco earnings tonight. Not really sure how those are going to play out, but we might have some data on them here. Probably haven't reported EPS yet. So far, not a lot of movement overnight. But with consumer confidence kind of bottoming out in April, yeah, this earnings might still just be okay. But next earnings on Costco might be a little worse. Feels like the market wants to go down, but bulls are trying to hold it up. I mean, so far they're successful. The MM's still protecting us from the worst of the downside moves. So, anyway, thank you guys so much for tuning in. I will see you tomorrow morning. Later.